Good morning. Welcome to another edition of the Market Review, where we discuss developments in the capital and financial market as it affects the economy. Today, we'll be looking at improving financing measures for micro, small, and medium enterprises, which you call MSMEs, in Nigeria and even across the continent of Africa. You agree with me that financing is a very key element for supporting the success of small, medium enterprises, even down to micro businesses. And when they get that support, they can catalyze economic activities and uplift millions of people from poverty in Nigeria and Africa. With me to have this conversation, joining us virtually, is Mr. Franklin Odoemenam. He's the Managing Director of Fragg Investment Management Company. Nice to have you on the program.
Thank you. Thank you for having me.
Okay, so let's first begin with how critical is financing for MSMEs in Nigeria and Africa?
Okay, thank you. Thank you very much. If you ask me how critical, I think it's a very important issue. I would begin to even make a slight comparison. If you compare Nigeria and Africa as a whole, looking at the investment landscape, if you look at, for example, the Western nations, let's take Germany, for example, you see that startups, or if you go still down to MSMEs, they have enhanced support from different players, different actors, stakeholders supporting them. We see that in coming back to the Nigerian context, there is no doubt that the MSMEs, they are the engine of growth for the economy, and they constitute also a kind of the highest employment, maybe if you like, as they serve as the highest employment generator. And according to the Nigerian Bureau of Statistics, I was looking around, I saw some very high numbers. If you look at the number of SMEs we have in Nigeria, about 37.7 million of them, if I'm right. And it goes further to say also that even up to 90% of these businesses in Nigeria fall under this category. And still, they are below somehow 10% of the GDP. Reason being that they lack access to financing. And there are also reasons, if I may also use the opportunity to link this here, the reasons where you see that the SMEs, they are not performing. One is the overall lack of access to funding. They do not have the needed funding to operate. When available, these funding instruments, they come at a very high interest rate, or the cost of funding seems to be seemingly high. But also, if we look at the banks or the financial intermediaries, on their part also, there's a very high perception of risk on investing or giving financing instruments to these MSMEs. Furthermore, you see also, even when there is a possibility for these businesses or MSMEs to access funding, there's still a hurdle of coming up with collateral. If they are not able to provide the collateral in developed countries or other economies, you see guarantee banks providing a coverage for them in a case where they are not able to when they have no access to collateral, they have this to cover them, to enable them access the funding. So funding remains a very critical element for these MSMEs to upscale, whether you look at it from the level of startup or even upscaling to get to other levels. So they are being highly constrained due to lack of funding.
Now, Mr. Franklin, you've highlighted it very well. The concerns of high interest rates, concerns of them assessing funds. And this is not to say that we don't have interventions. For example, the Central Bank of Nigeria, since 2015, has carried out several intervention measures, whether it's the agri-interventions through the various schemes for agri-based SMEs, even down to the creative industry recently. That's when we had the COVID pandemic. We've also seen various agencies like the Bank of Industry, the Development Bank of Nigeria, all designed to support the MSMEs space. So my question to you is, with all these various interventions provided for MSMEs, the emphasis seems to be more of SMEs, the small, medium enterprises, while the micro businesses seem to be left out from the equation. And the understanding is that the micro businesses themselves constitute over 80% of the MSME value chain. So there are discussions like, should we have a specialized funding agency that focuses on micro businesses, or should we continue with the whole MSME value chain? But for you, how can this trend be reversed, whereby interventions, like you rightly said, a challenge of funding, scales down to the micro businesses who, like you said, need to now scale up to contribute over 10% to our gross domestic product, taking Nigeria as example?
Thank you. I think in one way, I concur with you by saying that in the time past, there has been several intervention programs from the government, or be it through the central bank, working with the commercial banks or the general financial intermediaries. In any case, we see, I don't know if we can pinpoint the issue of the large population, Nigeria being the most populous Black nation in the world and the largest in Africa. So it is clearly seen that these interventions still do not reach the MSMEs that need it the most. So whether it's there has been the SMEDAN interventions through the SMEDAN, the other one you win, trader money, Empower, money market, or market money, whatever they are called. There are several of them coming at different times, addressing also different segments, or whether it's agriculture or now small traders or whatever. The bottom line is that there's still a huge gap. But I still see also that there are some service providers that are also in the market. Perhaps they are not in the majority, where you have also in Nigeria you have the microfinance banks of different categories. But I must also use this opportunity to mention a few of them that have been outstanding. I've personally been involved to see the level of intervention they have, going deeper in terms of outreach in different areas, not only focusing on the urban, but peri-urban and rural areas. Example of those will be Lapo Microfinance Bank. Another one will be grooming microfinance activities. These are really organizations that have products that are specifically targeting the MSMEs in different capacities. So through the rolling out of diverse products, whether it's the SME loan, targeting the individual, or targeting the group on MSME loans, on be it for the housing, be it for the education, be it for the health. These are diverse products they have. I think the question would not necessarily be to increase the number of microfinance banks or institutions we have in Nigeria, but I think statistics has it that there are over 1,000 of them. Yeah. I think rather the question would be on adapting the best strategy to target the MSMEs. And those that have these strategies, they are absolutely doing well. We see that, like the examples I mentioned, the grooming, the LAPO, and a whole lot of others. Some are indigenous organizations, some are also foreign organizations coming into the market to address these needs. Lately, we are seeing also through the evolution, now you have the fintechs, although these ones are mostly moving on the level of consumer loans or things like that. But there are also some smaller fintech organizations that have different products. But for example, in savings, I know about the piggy bank targeting the savings, and the others targeting pension or whatever. So we need to have maybe more of these organizations, or the ones existing should deepen their outreach and upscale their services so that they could reach more people.
I really like the fact that you said we don't even need to have more microfinance banks, but we need to look at products, apart from products, strategies, and the fact that with what we're seeing with fintechs, there's a lot of prospects in terms of what can be done. I mean, you rightly said it, payments is to be the major thing, but we're seeing them diverse into savings, pensions, and various parts of the tech ecosystem, which is very good. And again, a way of improving these investments and strategies. So it's a lot to grab from. But let's look at what is really a huge development now, which globally I would say is a trend, and companies are beginning to take that seriously. And that's impact investments, because we're looking at sustainability. It's a very critical issue now. Now, how important is the environment, social, and governance to MSMEs as a requirement for attracting investments? How important is it now that this should be integrated into every MSME's activity to attract financing?
Well, the issue of ESG integration into business activities, I think this is gradually becoming mainstream. A few years ago, this topic was looked as a kind of a complement to doing good, right? If you even go back to the corporate social responsibility, where organizations try to do this to make them also feel they are doing good, right? But we are seeing now that the trend is really moving on, seeing this to become the mainstream now. If we, I know that this discussion is at the level of the MSMEs, but if we go also consider the wider spectrum of investment, going even to the level of the wholesale investment, you see, we will land at a broader topic of impact investing, where organizations now make this to be a kind of balance between generating profit for the investors and then doing good. Doing good not only to people, but also doing good to the environment. In Fragg Investment Management, maybe let me use this opportunity also to mention that this forms the basis of our mission or strategy, what we deploy. We say that for us to partake in any investment opportunity, we want to see that these three bottom lines are reached. One is the we don't want to be a charity. We want to engage in business activities that are marketable, that are bankable, that have commercial qualities. At the end, you are not giving handouts. People engage in business or entrepreneurial activities, and whoever that is an investor in whichever value chain that they are standing, that they receive back the promised return on their investment, not even at a compromised rate, but at a commercial also rate. Secondly, we insist that in as much as we make or generate profit to our investors that want to have their profit back, we also want to achieve a measurable level of social profit, which is social impact. That means if you're working with the people, trying to consider also the welfare of the end client. And in whatever way you look at it, you see that the MSMEs now form part of the end side of the value chain. With the example I started, if you look at the value chain of the investment, so you see the wholesale investors giving to the meso, and then it reaches to the bank, and then they finance these entrepreneurs. So we insist that there must be a measurable level of social impact, which is achieved through those who work with us, the end beneficiaries, that they receive this. Thirdly, while we do these things, the investors are getting back what they've invested. The clients are happy because they are not being put at a difficult corner. They are not being used. We want to insist that they are also part of the system. But then the environment, we want to be also considerate to the environment by protecting the environment. In this case, not being involved in any activities that would hamper the environment. That's why in our strategy, we don't involve in any business activities that is related to fossil fuel production or distribution or whatever, hazardous chemicals, and many of those. There's the IFC list of exclusion list, those areas we do not consider. So we consider this very much important. And in our program, I also use this opportunity now to mention we have an accelerator program which is ongoing, which we are doing with the African Guarantee Fund.
Okay.
Through this, one of the most important components of this program is to help SMEs that are operating in the impact areas to integrate the ESG standards into their main operations so that it becomes a standard that they can say, okay, we are running our businesses, but then this forms part of the business process, forms part of the business model. So we are very particular about this, and we promote this. And even in the training also we provide with our partners, we try to create topics on this, on how to support SMEs on integrating these standards into their operations.
That's very interesting, how the ESG is being integrated to help the activities of MSMEs. But let's look at the markets. The capital market is very key. I mean, recently Nigerian Stock Exchange hosted a webinar on capital market and SME financing. So I'm going to ask you, how can the capital markets in Nigeria support SME growth, financing and otherwise?
Well, this is, I think this is coming like a little bit outside the spectrum of our focus, because we've been working somehow outside the capital market, trying to mobilize private capital to invest in businesses and then to provide technical support also outside the capital market. But then this becomes also, I mean, your question becomes also interesting, the way it's coming, because we are currently having a discussion on partnership with the Nigerian Stock NSE on how we can also collaborate in supporting the SMEs that are working with us, that we are mobilizing funds for, to help them bring them to the capital market. Thank you. You mentioned the webinar that was held, I think 2 weeks ago or thereabouts, by the NSC. I participated, and it was really rich and interesting. Well, we can see that there are also some levels of participation if you look at what they outlined also in the webinar, which we see, and these things form also part of the discussions we are having on creating an alignment between our services and how we can integrate them in order to broaden also a kind of the channels that we have for mobilizing capital for SMEs, including the NSC, to what we have already. So we are seeing that access to capital formation through the issue of equities and corporate bonds, that's one very good way that the SMEs can benefit from the NSC. Another one is the admission to prospects, which will raise brand awareness and prepare for the issue or sale of equity as part of a succession planning progress in the NSC.
Yes.
Also, the SMEs will enjoy the benefits of good corporate governance,
yes,
and enhanced efficiency and effectiveness, which this brings, because if they are listed, that means there's a kind of reporting that will be expected to provide, and oversight, and this will enable them also to uphold and raise their standards. Again, the companies also may secure capital at a competitive coupon rate in the case of bond issuance, right? And under conditions that are more favorable to the others, or even to the more traditional methods of raising finance, which we have. If you look at it in this way, the way there are kind of standards and eligibility criteria that these MSMEs would have to, these SMEs would have to meet up with. And you see that through the capital market, they are somehow would cut through this and would have would come faster to the queue. Also, the admission of equity will create an opportunity for existing ones or new shareholders to exist the market efficiently in the future.
Yeah.
The most important one, which I consider as interesting, is that there's no collateral required to access financing on the capital market. And if they are already there, they would profit from this.
I mean, I like those things you've raised, the access to financing through equity and bonds. It's very, very important. Admission to prospects. There are a lot of opportunities. You can secure capital at the coupon rates, and like you said, no collateral is required. So once they're there, corporate governance is strengthened, they can really access finance. But finally, you have an initiative. I mean, Fragg Investment Management is now the fund manager for Grooming Endowment Trust. I think that's a confidence booster for you. But how are you going to use this as a vehicle to bridge the financing gap for SMEs in Africa?
Thank you again. I think the Grooming Endowment Trust is, I would say, a product as well as an opportunity that we have in the market now to complement what we have already. Why it's a kind of innovative product is because of its anchor on these things I mentioned earlier on the, if you like to call it ESG, but I rather prefer to use the broader concept of impact investing, because this targets businesses that are operating in the impact domain. So the impact domains in our own classification, we have, for example, inclusive finance, education, health, affordable housing, agriculture, and the broader climate finance, which touches renewable energy, circular economy, like the recycling and waste management and things like that. So this now would come in and complement the difficulties also that we have currently in Nigeria on access to financing. We know that the foreign players have been also playing on this terrain, but then it's obvious now the limitation we have now. The country is currently has fallen back into recession, and the big issue of FX liquidity in the country, the scarcity of the FX, and also the volatility of the currency, in using it as an instrument for investment, makes it also difficult for foreign investments to come in at this time. Because even if the investors are interested in making investments, they see that's difficulty on drawing back their capital at the exit period. Even when they want to go out, there are also organizations also not being able to match with the high rate of the exchange. I give a practical example. Take for instance that even, let's say, one attracted an investment March last year. The dollar was 360. And then let it be, your business has been going well without let's throw away the issue of the pandemic. It's been going well. And now, let's say you received a facility for 1 year or whatever, and now you have to pay back. Even if it's not paying back the principal, you have to pay back whether it's a coupon or the interest. And you see that, I don't even know the rate now, but you are paying like almost double of that. The question is also not even when you are able to pay, you can't source that. You can't find it. It happened in the market between 2016 and 2017 that organizations even that had those foreign exposures were not able to source for the needed capital or funding to pay back, even when they have the Naira. So this having this fund in Naira, I think gives us the edge and positions us to be able to take care of the market. I know the challenge also lies now on identifying really quality businesses. But then, since the fund is there, we are at the outlook on very good businesses that measure on these three standards that I've mentioned before. They are marketable, bankable, they are not, they may be social enterprises or whatever, but they will be looked at a commercial value with commercial eyes, that they are also measuring with their peers. And then, in addition to this aspect, there are two other: the environmental consideration and the social impact. Okay. But in addition, that's also what makes the Grooming Endowment Trust specialty. Okay. That we are not only interested in, let's say, dispensing cash into businesses. We want to also provide a kind of technical support to these businesses, because we have clearly seen that what makes the businesses to grow or to scale is not only on the injection of capital, but also we see that there's a huge need to support the capacities of these businesses through a kind of tailored technical support, which will be identified and then provided to them. So these are the things we are providing, and working not only like independently, we are also, in addition to injecting the capital from the trust, we also are working concurrently by mobilizing some other additional foreign or offshore capital from impact investors or development finance institutions or specialized investment funds
Yes.
that we can have a co-investment opportunities once these opportunities have been identified.
Thank you very, very much for this conversation, Mr. Franklin Odoemenam, Managing Director of Fragg Investment Management. Thank you for sharing insights, particularly on how small, medium enterprises can benefit from financing through capital market and other sources of financing.
Thank you for having me. Thank you. I appreciate.
Thank you.
And that was Mr. Franklin Odoemenam, Managing Director of Fragg Investment Management, speaking on financing for small and medium enterprises, opportunities in Nigeria and Africa. Indeed, a lot to learn, particularly how they can leverage the capital market. You can watch and gain more insights on developments in the capital market and financing for SMEs and businesses. Log on to our website, www.proshareng.com, and you read much of the stories and analysis when you go to the right hand of our bar and read around MSMEs, policies and strategies, and MSME activities. Also, our capital market column side where we have so much rich stories around the markets. Also, you can send your questions and comments and views about today's conversation on how we can improve financing for SMEs in Nigeria and Africa, particularly through the capital market. Send your views to news@proshareng.com. We'll be glad to receive them and respond to you appropriately. Also follow us on our social media platforms displaying on the screen. To come away for another edition, thank you for watching. Have a nice day and stay safe.